All right. Joining me is Giang Bui, head of issuer growth at Securitize, who, of course, is the world's leader in tokenizing real world assets. They sit right in the middle of bridging TradFi and DeFi. That includes partnerships with top asset managers such as BlackRock, Apollo, Hamilton Lane, KKR, Van Eck. There are a number of others. We're talking about over $4 billion in tokenized securities overall. But just last week, Securitized announced a collaboration with the New York Stock Exchange to develop its tokenized securities platform. We'll get into all of the details of that here in a moment. But I have to tell you that Zhang herself, this is someone who is extremely well versed in market structure. She was previously head of US equities and ETFs at NASDAQ, of course, the world's second largest securities exchange. Prior to that, she was at SIBO. She was at the aforementioned New York Stock Exchange. And so I'll tell you, if anybody knows about market structure and exchanges and everything associated with securities listings and trading, it is absolutely Zhang. And so, Zhang, welcome to the podcast. It's so great to see you.
Oh, Nate, thank you so much for having me, and thank you for the kind words about my background and also, highlighting Securitize. So I appreciate it.
Well, it's funny because you are actually continuing a trend of people who I have connected with on the TradFi side over the years, who's now involved in crypto. I've noticed a very clear trend of TradFi talent gravitating towards the crypto sphere in some form or fashion. But how have you been?
No, I've been great. So I joined the Securitize team earlier this year. As you talked about, like there's definitely a conversion of TradFi and DeFi, and so really, I think it's all coming together. You're seeing digital asset becoming more institutionalized. The announcement we made with the New York Stock Exchange, it's a big, it's really very much like a testament to that you're seeing, as regulatory clarity becomes more known. There's much more appetite and momentum in the space.
Yeah, so there was this big news that Securitize is partnering with the New York Stock Exchange to support tokenized securities on NYSE's digital trading platform. And again, we'll get into all of the details of that here shortly and certainly talk about why that's important. But first, do you want to offer a quick introduction to Securitize for people who are unfamiliar with what you do? How do you like to describe Securitize?
Yeah, I mean, you gave some of the highlights about who Securitize is, but at our core, we are a tokenization platform. We are the largest tokenization platform. We were founded in 2018, so we have a long history in the space. But really, when people ask about what does tokenization mean, to us, it's about upgrading the infrastructure that the market's built on, so that assets such as stocks, ETFs become available on the blockchain, and that way making them more accessible, more efficient, transparent, and secure. And at Securitize, our approach to tokenization is really in lockstep with the issuer. So we do issuer-led tokenization so that we can tokenize their asset in a regulated and compliant way, and so that investors understand what they're buying when they're buying the token is one-to-one with the underlying security.
Yeah, so talk a little bit more about that. I mentioned some of the asset managers that Securitize is working with, BlackRock, Hamilton Lane, Van Eck. There's some very prominent names. Just provide a little more detail here. Like, can you explain Securitize's role if we look at, say, the BlackRock US Dollar Institutional Digital Liquidity Fund, BIDL, or the Van Eck Treasury Fund, those sorts of offerings? Can you talk more specifically about what Securitize actually does here?
Sure. So when a firm like BlackRock or Van Eck decides that they want to tokenize a fund, we can support them throughout the whole life cycle. So we register. We're a fully licensed entity across the SEC and FINRA in the U.S. as well as in Europe. We have an SEC registered transfer agent where is our tokenization engine. So we tokenize the share and manage the official shareholder using public blockchain as our underlying ledger technology. And then we also perform investor onboarding, KYC, AML, whitelisting, and compliance for those tokens and the investors that would like to allocate to the tokens. And then we also support the distribution for them, and connect those assets into the broader on-chain ecosystem. We also have an SEC registered fund administration, so we can provide fund servicing for the products as well. And and we have an SEC registered alternative trading system to enable secondary trading of the assets as well.
Yeah, and one thing I was going to ask you to explain a bit further before we talk about the NYSE collaboration is just what a transfer agent is. I think some people hear this term and they're maybe not quite sure what this means. Do you mind explaining the basics of that as well? Because again, I think that'll help set up the conversation around NYSE.
Yeah, I mean, I think, prior to coming to Securitize, I kind of put, transfer agent, fund admin, we're all in the same like fund servicing, space together. But, really being at Securitize, I got to understand the importance of the transfer agent functionality. So really, it's a financial intermediary that is regulated and is registered with the SEC. That is the official record keeper of the share of the securities ownership. So we process transfer of ownership whenever the securities are bought or sold, and we handle corporate actions related to the security, just as dividend processing or splits. So, really, it's and the SEC had put out statements around tokenization that an issuer may issue their tokens, their securities in tokenized form, and use a blockchain or a DLT to be their official shareholder record keeping.
Okay, so that's perfect. Now let's talk about this NYSE collaboration. Again, this made a lot of headlines last week. Do you want to walk through what all this entails and why you think it's important?
Yeah, sure. So a couple months ago, the NYC had announced that they will be launching a new trading platform, or an alternative trading system for tokenized securities. So the announcement last week was about NYC choosing Securitize as their first digital transfer agent, which means the tokenized stocks and ETFs and other securities that we tokenize through our SEC entities in partnership with these asset managers or companies will be available for trading on this NYC digital platform. We'll also be, as part of the announcement, we'll also be the design partner for their platform and also have our SEC registered broker dealer connect to this platform to really facilitate liquidity and compliant trading as well. So we're really excited about this announcement because, it's really about setting the standard for how tokenized securities can be issued and traded in a regulated way where there's investor protection while still preserving the benefits of the blockchain, like 24-hour trading or instantaneous settlement.
Yeah, and what does it say to you that we have the world's largest securities exchange building a tokenization platform? Do you think it's as simple as saying tokenized securities are the future and we're simply in the early days, but this is clearly where everything is heading? Or is it more nuanced than that? Like, how do you look at this?
Yeah, I mean, I think, the announcement by the NYC, and you see announcement across the financial institutions that they're investing into, their digital asset team. So whether they're, growing the team or adding to the team, or they're enabling these type of infrastructure to allow for tokenization to really accelerate and mature as a technology. So, what involvement by the NYC, to us, we think it's going to accelerate institutional adoption and really build towards a more modernized and efficient capital markets.
Yeah, and talk a little bit more about that modernization and more efficient capital markets. When you think about the benefits of tokenization, earlier you mentioned the 24/7 trading, which everybody hears about. Just talk more about what some of the problems are that you think are being solved here. Maybe problems too strong of a word, because again, it's more about efficiency and modernization, as you just noted. But talk more about what tokenization does here.
Yeah, I mean, I'll talk about it both from an investor standpoint and the issuer standpoint about why they're looking to tokenize. But from an investor, it's faster, easier for them to trade. They can access more investment vehicles that might before be only available for high net worth individuals with high minimums. So now they're able to transact in securities in the same experience that they have when they're trading crypto or other assets, 24 hours a day and very easy to transact. And it would also tokenization also enable them to be able to truly own the stock. Right now when you buy or sell, when you buy a stock, you actually don't own the stock yourself. Like, it's an entitlement to the security. On the books and records of the company is really held at DTCC or the street name. But tokenization allow you to self-custody your shares and be able to be a true owner of the security. And now that you can self-custody into your wallet, it also allows investors to do more with their stock position. So activities that maybe were not as accessible, like borrowing against your stock position to go out and buy a car or make enhancements to your home, is now available to everyday investors through tokenization. From the issuer standpoint, it's really about, in our conversations, it's about, how do they broaden their investor base, reach global distribution. You're really tapping into that crypto native ecosystem that is now about 2.5 trillion in market cap. So they want to just engage with more investors. They can be able to make their securities more efficient, like allowing for daily distribution. So, instead of having to wait monthly or quarterly for your distributions, they can offer daily distributions to their investors and have that compounding effect for their investors. They can program in voting features so that you can make that process more efficient. So ultimately, there's a lot more connectivity and engagement that is possible between the issuer and their shareholders. So providing benefits to both sides.
As you go through that, I have to put you on the spot a little bit because we share many of the same friends and colleagues in the ETF space. Of course, I'm an old ETF guy, and I've had numerous of our colleagues tell me that tokens are never going to replace the ETF wrapper. And the rationale is just that the ETF wrapper offers way too good of a deal to investors. And they'll tell you that if you look at the US markets and the back end infrastructure, it's already highly efficient. And so, how would you respond to that?
Yeah, and I agree. I mean, the ETF wrapper has made investments more available to more investors, and the investor experience has never been better in terms of accessing these great investment vehicles from all the asset managers. So what tokenization does is to me, it's the next evolution in investment management. So it's not going to replace the ETF wrapper, right? Like there's still all the efficiencies in the ETF wrapper. What's it's enhancing is the market infrastructure that's behind it. So it could make, the day, our view is, our vision is to tokenize the world. So we believe that all assets will move on chain. So when you have all assets on chain, does that make creation redemption even more efficient than it is today? Can investors now, global investors, buy into the ETFs more easily? So all of that, it's an incremental step into a better experience for all investors.
I mentioned at the top that you've worked directly at these three major securities exchanges, most recently at NASDAQ. And I'm curious, I'm not sure what you're able to share, but can you offer any insight into how these exchanges have approached tokenization over the years? Like, is this something that has been ongoing for a while? Is this a more recent phenomenon? Or exchanges simply waiting for the regulatory environment to shift? I'd love any insight that you can offer here.
Yeah, I mean, exchanges are ultimately technology companies, so they're always at the forefront of wanting to adopt new technology, especially ones that is, like tokenization, which is about modernizing the markets and creating better experience for investors and as well as their issuers. So, it's definitely something like when I was at NASDAQ, we had announced that they're gonna that there's a proposal to enable trading of tokenized securities, and NASDAQ actually recently received approval for that proposal from the SEC. So their proposal is to enable that tokenization through the DTCC, and the approval from the SEC we think is a really positive signal from that they're really creating a framework about how to trade tokenized securities and how can it be integrated within the existing market infrastructure. So I mean, NASDAQ with their proposal, NYC with their proposal, you see a lot of announcement of partnerships out there. Like we all think that's really positive for the overall adoption of tokenization.
I'm glad you mentioned the NASDAQ proposal because, to your point, a couple of weeks ago, the SEC did approve this. This would enable trading of certain stocks and ETFs in tokenized form. We don't have to get into the weeds here, but how does what NASDAQ is doing compare to NYSE's initiatives around tokenization, or are they very similar?
Yeah, I think they're approaching it in a little bit different ways. The Nasdaq proposal is to enable trading of allowing for trading of tokenized securities and indicating that they can settle in token form or in traditional form at the DTCC. And they also made an announcement about their partnerships with Kraken and others. And the NYC made an announcement that they will be standing up a new alternative trading platform that will allow for trading of tokenized securities. And so, they'll have tokens, different types of tokens beyond DTCC that is available for trading on the NYC platform. So as we talked about before, Securitize is going to be a digital transfer agent for the NYC platform. So the tokens that we mint outside of DTCC is also going to be available for trading on the NYC platform. So our tokens, being that it's going to be issued on public blockchains, but they will be permission tokens. So ensuring that it can only be transferable to eligible investors, but that those tokens have much greater utility in the DeFi ecosystem, really being able to tap into all the benefits of tokenization.
That actually brings up another question that I think a lot of people have. You mentioned the public blockchains, and so people will immediately think of something like Ethereum.
Mhm.
And I think there are a lot of people who will watch this or listen to this, and they're trying to connect the dots as to how tokenization might benefit crypto prices and how they might take advantage of the rise of tokenization. And I'd love to hear how you think about this. And let me be very clear to everybody, you're not here to offer any sort of investment advice or anything like that. I just want to talk at a higher level because there are a number of public chains out there that are competing to be the tokenization rails, so to speak. And so, how do you think about the relationship between the rise of tokenization and the prices of various crypto assets?
Yeah, and when it comes to like the different blockchains, we're connected to almost 20 different blockchains. So like our assets can be deployed onto any of them, and we work with the issuer in identifying the right blockchain and the right ecosystem to be able to deploy the assets on to tap into that ecosystem. But to your question about what's the relationship between tokenization and crypto asset, we think investors are really looking at these tokenized real world assets like funds like stocks and ETFs as diversification from cryptocurrencies that might not always have intrinsic value. So the assets that we're tokenizing, they're with reputable issuers who have a long and trusted history of managing investments. So they're bringing that investment vehicles that are available in traditional markets on chain, and be able to tap into some of the utilities on chain. So really our conversations about tokenizing hasn't slowed down despite all the crypto market volatility. If anything, it's accelerating because we're seeing more interest shifting away from crypto assets themselves into more RWA. So really, in the two months I've been at Securitize, the conversations has not slowed from both asset managers, but also like banks and brokers who are going to be liquidity providers and be part of that ecosystem to support tokenizations, to companies. And so it's really been across the industry. Like there's definitely a lot of interest, and people are going from just learning about tokenization to I understand the benefits and how do I enable it for my business.
But theoretically, the underlying chains, like you mentioned, working with 20 different chains or so, should those theoretically benefit at least the prices of those crypto assets as tokenization takes hold, or is there a lot more that goes into it than that?
Yeah, I mean, we deployed onto the different blockchains, and there's different DeFi protocols that uses those blockchains that are going to be that our assets could be integrated with. So it does, build the ecosystem around those chains. And when you're seeing, what are some of the use cases for these tokenized assets? They are being used as reserves for stablecoins for some of these blockchain foundations, endowments. So they're being used as some of those type of assets, and then they're also being used as collateral to borrow against, and so you can borrow stablecoins against it. So there's, definitely it does help benefit the overall market, and it makes it more institutionalized. And going back to like the trust that people have had in these traditional markets, bringing them on chain also helps matures the digital asset space as well.
Well, I think it's remarkable that we sit here today and you have names like NYSE and Nasdaq. You mentioned DTCC, all involved in tokenization efforts. Clearly, regulators are much more supportive now. We can talk about the SEC and the CFTC. It's got to be interesting from your perspective after being so heavily involved just on the TradFi side in the back end of traditional market infrastructure to see what's happening with tokenization.
Yeah, no, I'm very excited to be on board at Securitize, and it's really we're seeing a lot of acceleration and as you said, like interest in the space. And today it's about 30 billion in asset under management in the tokenized real world asset space, but there's a lot of projections about it hitting 2 trillion in the next 5 years, and that's on the low end of the projections that are coming into place. So as more institutions come on involved, and more funds come on chain, more stocks and ETFs come on chain, you really do see a hockey stick effect, we believe, in the space.
Well, Zhang, again, so great to connect here on the crypto side, is what I'll call it. I really appreciate you taking the time this week. Thank you so much for joining me.
Thank you for having me.
That was Giang Bui, head of issuer growth at Securitize. Thank you for listening to or watching Crypto Prime. As always, you can stay up to date on all of my latest guests by visiting cryptoprimepodcast.com. See you again next week.
Crypto Prime is hosted by Nate Geraci, president of OTR Media LLC. Nate is also president of investment advisory firm Nova Diaz Wealth Management. While OTR Media and Nova Diaz are related by common ownership, they are separate and distinct entities, and anything discussed on this program should not be construed as an official statement by Nova Diaz. Some guests appearing on this program may also be financial sponsors of Crypto Prime. This program is for informational purposes only and does not constitute investment advice. Investing in crypto assets involves substantial risk, including the possible loss of principal. Any past performance figures discussed are not necessarily indicative of future results. Visit cryptoprimepodcast.com for more information.